All righty, traders. This is Blake Morrow. You are listening to the Daily Roundup. What do you say today? Getting a little bit of volatility? Yup. Seeing a little bit of selling at equities. Yep. I mean, feels that way. What are you guys thinking here? What are you thinking? All right. Well, I'll tell you what I'm thinking. All right. First and foremost, let's take a look. We're going to have to take a look around at everything. Let's start with equities. So equities coming off, here's the S&P. That's an hourly chart, really not fair looking at it right now. And I have to also admit that if you guys think that, equities are breaking as of right now, they're not yet. I don't think so. But we're seeing signs of cracks today. I think the predominant theme at the moment is profit taking, and you're seeing a big reversal in the emerging market currencies. You got the dollar, Mexican pesos in breakout territory, and I want to say that it's breaking out right now, but it's just we're probing some pretty big levels at this moment that I think we have to be kind of careful with, right? So that's like number one. I think that is, if you look at like the South African rand, we're breaking and trying to test like higher levels, and then you see currencies like the Aussie. That's a big failure at 80 cents. Really big resistance levels were hit in the Aussie dollar, the Kiwi 161% extension. You have the cable that showed a reversal 2 days ago in Asia. It's now starting to play out. Dollar Canadian hit the 127% long-term extension today. Dollar Mexican peso is breaking higher. Volatility is up significantly. There was a note from JP Morgan today that said volatility is in a bubble, meaning that volatility should have actually be dropping down towards 10, and it hasn't yet. And I forget what the guy's name, Kolakovich or Kolanovich, I forget what his last name is, but he has said that people keep believing stocks are going to come down on this, this fictitious belief that stocks are going to come down. Therefore, that's what's kept volatility up. But the fact of the matter is volatility hasn't sold off. And so if stocks start coming down, volatility is at a perched level, which I think is a risk for anybody who's short volatility right now, be quite honest. US dollar, Norwegian krona, false breakdown today. Big reversal. I picked up some of that earlier today. Most of you guys in the chat room know I picked it up below the support. I really want to add today, but I would like to see where we close. Where we close will be important. One of the other things I want to talk about really quick is yields. So the yield, we're basically the 10 years at $1.50, big resistance here. And I am worried about yields turning lower again. And if they do, what's the trade? What do you guys think? Use the chat box. If yields start to turn, what would turn? Jason says buy gold. Okay. What else? Let's say yields turn lower. How about in currencies? What would you do? Jason said the dollar will be in big trouble. I don't know if the dollar would be in big trouble. Dimitri said Swiss long. I think Swiss long or yen long. Now, let's think about this really quick. If yields, we can just use the 30-year chart. Let's just use this for now. Like, let's say yields start to reverse like this. They start to move lower. Okay. Then you take these currencies like, I mean, look at the moves, right? Let's just think about this. Here's euro yen, multi-year trend line coming right in. By the way, we're there. 161% extension is at 130 and a quarter. I'm not staying short it right now, but man, if yields start turning lower, there's the euro yen. Look at the sterling yen. I mean, we've rallied, and I've missed it, by the way. 700 pips in the last 3 weeks. Aussie yen, I mean, you know, above the 78% retracement there. Kiwi yen, explosive. Canadian yen, right into resistance. Look at this. This is probably a decent short here. I'm not short, but I mean, look at the risk reward. You short here at 84.35, right? And then you, you know, oh shit, oops, I didn't say that. I mean, I didn't mean to say that. I'm going to sell a little here. Look, you guys talked me into a trade. How's that? How do you feel like you guys talked me into a trade? You stick your stops, you know, above today's highs. I mean, you're risking maybe 50 pips to make down to 82 and change, like 82.50. So let's just think about this. Okay. Entry price 84.72. Stop loss 85.26, let's just say. Target of 82.40. Let's take 100,000 in currency. Oops, that's a million, but I'm just going to do 100,000. So, I mean, you're risking $600 to make 2,700. It's a 4.3 to 1 risk reward ratio. Right? Okay, let's say you're trading 50,000 in currency. You're risking $300 to make 1,400. You're trading 500,000 in currency. You're risking $3,000 to make 13. I mean, I don't think that's bad risk reward. Do you? I mean, you know, if yields start to rally. So like for me, I just took a small position, and what I'm going to do is I'm going to add if yields start to reverse, and because I'll play it as a false breakout right now. But what I'll really do is I'll add aggressively below like some supports down here, because I have to confirm that yields are actually going to reverse, right? That's kind of the key to all this, in my opinion. So that would be my thoughts. What do you guys think? Worth the risk reward? Oops. Let's see what else. Sorry. Let's go. Oh, so I did tweet about this, but I want you guys to see this. So as I blogged about it regarding the euro sterling, is that if we started to see risk aversion, you're going to see the euro sterling turn around. I thought we would turn at the 86 pence level. We actually plunged through the stops Asia yesterday morning, or it'd be whatever. Now we've reversed, as you know, we had this hammer yesterday, long lower shadow doji hammer. You can see right here. Right here. So long lower shadow doji, right? Wasn't quite a hammer, but it was pretty damn close. It was, but anyway, you can see it's playing through right now. Now what we're doing is we're pressing previous support. It should be current resistance right now. We're also taking out this downtrend line. So my opinion is this is going to open the door for the move back to 88, maybe 88.50, and that should allow, you know, those of us that are long to take some profits up there if it really gets going. But if you're looking at the euro and you're like, well, why is the euro so strong? I think it's really a lot of the euro crosses. So you got the euro pound, you got the euro Aussie. Look at that reversal. Wow. Euro Kiwi, pound Aussie, pound New Zealand are just kind of blah. But I think this euro sterling will pick up some steam, especially if stocks continue to stay weak here. So Craig says, I was thinking of shorting yen crosses more as a risk off trade. I think it will work if yields go down here. Let's say the Fed chairman is correct and he's like, yields are going up, but it's temporary. Inflation pressures are temporary. It's transitory. Let's say yields start to come down because of growth concerns. And then we got copper, right? Copper coming down. We've got, things coming down. So, how do you play that? I think, short yen crosses is the trade. Last thing I want to mention is watch these cryptocurrencies. If they really start to fall, then I think you're going to start to see things accelerate lower. Okay. All right, guys. Well, hopefully you're doing well today. I love the fact that we're getting some volatility. What I'm not going to be happy with, and I'm going to tell you this just straight up, and this is the thing that kind of keeps me up at night, is we have gone straight up for so long. I'm worried that we're going to go straight down and not bounce. And I know that's, we always say up on an escalator, down on an elevator. I mean, we've been going up for so long, guys. This is one of those moves that if it starts, it just may not give anybody a way to get out. And it may not give us any ways to get in if it really starts to pick up steam over the course of the next, couple of days or whatever. That's the thing that kind of keeps me up at night. I love two-way price action. I hate one-way price action. I think I can speak on the behalf of everybody here, right? You want two-way price action. You don't want one-way price action. That's just it's hard. It's so hard to trade. So hard to trade when it just, there's no pullbacks. Anyway, all right, guys. I hope everybody's having a great day. I'm going to talk to you in the chat rooms or a little bit later. And I hope I want to just thank you all for your support. You guys are awesome. Oh, don't forget, tomorrow, if you didn't hear me say this earlier, tomorrow we're going to have an interview with Stelios and myself. Stelios about his book, Truth and LIBOR. If you guys haven't bought it, it's $20, $10 for the book, $10 for shipping, or close to, depending on where you're at. But get the book, please, for Stelios. But also so you can read about his story that he's going to tell you a lot about tomorrow. But also tomorrow I'm going to be interviewed talking about trading, larger amounts of money, proprietary trading, my thoughts, how I've the last several years. And I want to break it all down for you guys. So, and because remember, I've been, retail. I've traded, obviously bigger sizes. So, what are my thoughts on all that? We need an interview tomorrow anyway, but it's something that I wanted to tell you. So, anyway, you guys have a great one. Thank you guys so much. You guys are awesome. Stay awesome. Talk to you soon.